Welcome, Benzinga Nation. You would think that after doing about 10 of these webinars, I wouldn't mute myself to start things off, but here we are. You know what we love to do is kind of talk about the trending topics that are going on in the markets, and that's exactly what we're going to do today. We're going to hear from some executives from different AI-related companies, including Qualcomm CFO, but we're also going to talk about some technical analysis because everyone's kind of seen the run that NVIDIA and other AI stocks have been on. However, is there a pullback where you might be able to get in on an entry and kind of have a better risk management? So we'll talk to Katie about that here in just a second as well. And as always, we want to make sure that your questions are answered as well. So make sure you get involved in the chat. We love to hear from you. And, you know, if you have any questions in terms of tickers that you'd like to take a look at, give us a shout. Maybe we can go ahead and get your questions answered as well. And, you know, when it comes to the AI space, there's so many things that one needs to consider. There's AI in different aspects of it, right? You have AI, which kind of really went mainstream with ChatGPT. Now you have AI that's kind of involved with everything. You have customer service that's designated with AI and how they have been able to implement problem solving through AI real quickly and in a much shorter time frame as well. Then you also have AI that can now create images based on verbiage that you may put out there. That's pretty cool. You can just say, hey, I want a handsome guy to host a AI webinar, and then you get a picture of me. You also have a chance to go ahead and have some video that's conducted through that aspect of AI. You also have companies that kind of use ChatGPT and then just layer something right on top of it, and they call themselves an AI company. So it's a lot of different things. Katie, give me a thumbs up whenever you're ready to go, and we'll go ahead and bring you on. Please welcome Katie to the show.
Hi there. Nice to join you today.
Thank you for being here. I hear you had a very busy trip that you were just in, you were at a conference. So how was that for you?
It was great. I was actually down in Mexico City of all places. So it was a bit far, but definitely worth the trip. I had actually never been to Mexico outside of vacation. And, there's a real appetite down there for US ETFs, of which I manage one. So that was the rationale for being there.
So give us some insights on what is it that you do. And, you're obviously the founder of Fairlead Strategies. What do you do?
We provide technical analysis, research, and consulting services primarily, and also have the Fairlead Tactical Sector ETF, or TACK. Our research is really very wide in its scope. We cover all markets, not just equities, but I'd say primarily equities. We have maybe 9 research reports that we're publishing per week, and it's consistent episodic coverage of the S&P 500 and anything that really relates to it. And we're always focused on idea generation, risk management, and basically market timing, using technical analysis as our primary discipline. And by that, I mean, we're using things like momentum indicators and overbought, oversold metrics and, support and resistance levels, ways to understand the markets that it's really more mathematically driven, all price-based, all, with the goal of identifying trends.
Having it be math-based is definitely intimidating for me. I'm not going to lie. So I'm glad to kind of have you on. You're welcome to share your screen so we can go over some charts that you want to kind of take a look at, because while you share that, I'll kind of repeat what I said to the audience to start things off is we've kind of been on this crazy run with NVIDIA where everyone is just looking at the number of, it's gone up, 100%, 200%. There's got to be a pullback here and there, but it just keeps going. All right. What is it like now in the top 3 in terms of market cap? Possibly going to take over Apple if it hasn't already. The stock split's been obviously beneficial, and I can share your screen whenever you're ready. Yeah.
Yeah. So I have it pulled up, the NVIDIA chart. This is a weekly bar chart if you have it. And you have seen just a real acceleration, of course, recently on the back of earnings. But even before that, NVIDIA is...
Do me a favor. It's coming up as a white screen. So if you don't mind trying to reshare it. If not, I can go ahead and have NVIDIA pulled up on my end as well.
Maybe we can try that. Do you see that one?
I do not, unfortunately. You can try sharing a window or a screen. Again, if not, we can go ahead and just share mine.
Retry that. So essentially what you will see is, an acceleration to new highs, but NVIDIA over time has stair-stepped higher. Yeah. And, to us, it's an uptrend. And we want to generally, of course, have the bulk of our positions in stocks that are in long-term uptrends. So we feel that that is, where the highest probability positions are.
Yeah.
And, NVIDIA definitely classifies as such. Now, the catch is, of course, with such strong run-ups, sometimes things can get overdone on the upside or the downside. And, indeed, people are reasonably worried that NVIDIA is a bit overextended, just given how steep the up move has been. Can you see it now?
So when you shared your screen, I could see us, but unfortunately now, whenever you change tabs, I can't. But for now, I can share my screen if you'd like.
Okay, why don't we do it that way?
Perfect.
So at least
So
we
here's
have
what
the
I've got.
price on the screen. And, effectively, we, have seen a breakout on the back of earnings. And breakouts tend to generate upside follow through because they effectively remove resistance from the chart. So we love to see breakouts, and the breakouts in AI are not limited to NVIDIA, right? We've seen breakouts in a lot of names that would be associated with AI, and generally they have very positive long-term momentum characteristics. So that's all the good news, but some do appear pretty overextended, and that comes at a time when the broader equity market looks poised to pull back. So our messaging has been of late just to, maybe stay with your core long-term holdings. But if you're looking to add some exposure, maybe give it a little time and a little room, and realize that this space is not at all immune, of course, to major corrective phase, even breakdowns. We've had a couple breakdowns even today.
Yeah.
ServiceNow, iPath, there's a lot of volatility in the space, right? So we want to make sure that we're, treading cautiously, that we're not taking position sizes that we're uncomfortable with, that type of thing.
So for the folks that say like, hey, we missed a trend, you're saying wait for a pullback. How would you kind of suggest folks to calculate how that pullback price point may be, right? So for example, and this is me, just a retail trader, so I'd love to get your insights on it. Here's the weekly, right? We kind of broke out on this aspect of it. So I've got like 974. That was like the new high for NVIDIA back in the day. Then you had earnings, and we broke, I think we got to 1,000 in the after hours, and then we finally broke out after that. So what would you say to folks like me who would say, all right, I'm going to wait for a pullback to 1,000 to kind of start adding to my position?
I mean, 1,000 would probably be conservative. It's really not that far below. Maybe in percentage terms, it feels that way, but in reality,
I mean, look at this. You're not kidding when you say stair step.
Yeah, it was there just a few days ago, so certainly wouldn't rule that out. The support levels can give us a sense of downside risk when we have those overbought downturns to indicate as such. So we have those overbought downturns in the S&P 500 and the Russell 2000 index. So that increases risk that the broader market pulls back. We don't have those specific sell signals in NVIDIA, not yet. So our message would be there to hold an existing position. But yes, if you were looking to add exposure, you feel like you've sort of missed it, you probably haven't missed an opportunity to add exposure into the next pullback. That next pullback might occur from a higher level, but your 974 level is for us initial support now that we've seen that upside follow through. Another way to manage risk with these very steep up moves and breakouts is to watch the gaps. So when stocks have like headline driven moves, they often will gap up the next day or gap down. And that gap can hold it's like a little bit of a vacuum on the chart, right? So if NVIDIA were to fall back into the gap on its chart, we would see that as a reason to expect a deeper pullback, that gap will effectively be closed. So the last gap I'm looking right now was right around 1099. So just below $1,100 for NVIDIA would be the sort of gap indicating that it would be filled. So that would be the first kind of risk metric for NVIDIA. So for those who are very sensitive to pullbacks, of which we, again, feel like this is a long-term uptrend we want to stay with in general. But for those that are sensitive to pullbacks, they might, pare back exposure if we do see that dip into the gap and, revisit it lower.
Now, for folks that want to find like the laggard plays where it's like, hey, you have like for ARM, for example, ARM's been kind of moving up to the upside as well. You have other companies, but unfortunately, there's a lot of noise out there where folks may just say AI in a press release or in a earnings call just to kind of get the buzz, kind of like what they did with NFTs when they were hot a couple of years ago, kind of like they did with crypto every now and then as well. Are there any stocks that you're seeing from a technical standpoint that you believe have been lagging but they might continue, especially if the markets in AI continue as well.
Yeah, and I get taken back to the .com era with
Yeah.
my history. Anything that had
Everyone's worried
.com.
about that. But if I'm being honest, Katie, and this might sound terrible, but like, I want people to not lose money. Let me make that very clear. But I would love a pullback because, again, I feel like people have missed this ride because
Yeah.
everyone's like, oh, it's going to come back. Oh, it's going to come back. Oh, it's going to come back. Man, it's been like 3 months before you really saw a pullback. And then what happens psychologically? I'm sure you know this in terms of how you see other investors. When you get that pullback, you're like, oh, man, it's going to come back even further. But it just never does.
It does. It feels it never feels good, right?
Yeah.
But listen, it is typically a healthy development. I mean, we have bullish long-term indications from our momentum gauges, and we do have all these breakouts, right? So when a pullback follows a breakout, then it tends to be a higher probability entry point. And we're already seeing some corrective price action. Okay, maybe Dynatrace, Super Micro as an example, even Meta, if you're considering that an AI play. So there are corrections underway, and those corrections we think are still have a little bit of room, meaning that we'll see more sort of corrective price action, sideways to lower, something like that from these names, and that will then become our opportunity. Seasonally, it's not a great time for the market. I feel like we need to see a bit more of those summer doldrums before we get to the entry point. And that's what we'll be looking for. So we go from seeing overbought downturns, which have happened somewhat recently, to what we're looking for now, which would be oversold upturns. And while some names have corrected, we don't have those oversold upturns yet. And that's going to be important to us as technical analysts as a way to identify entry points, as much as, the support discovery is as well. We want to see certain levels hold in general for each name's bottom up. And yet it's those stochastic or oversold upturns that we get really excited about.
Now, in terms of, we talked about stocks that might be lagging and, hopefully you get a pullback, but it is interesting to me where, SMCI for a while, it looks like anytime NVIDIA went up, SMCI would go up. Anytime SMCI would go up, NVIDIA would go up. But now you can see NVIDIA has just kind of been marching to its own different tune, own different drum to the upside as well. And, you kind of get that. How are you able to kind of, I guess, how would you suggest that folks that are watching manage their risk, right? Because you never truly know where the top is, where the bottom is, yada, yada, yada. Is there any tips or advice before we kind of go here in a couple of minutes that you have for folks that are looking to scale into this because they want to build a position that, say, is 20, 30 years out?
So there's a lot of ways, of course, to manage risk. And one way, especially in this space, I think, is position sizing to make sure that the higher beta stocks, or even, generally speaking, those would be the smaller names. Those are perhaps smaller positions because they're a little bit more of a long shot at times. Maybe the quality of the business isn't quite as strong. So position sizing can be one way. That's not the technical way to do it, but the technical way to do it for us is usually identifying a support level below which we'd be uncomfortable seeing that stock. So I'm looking at Super Micro on my screen right now. There's some support around 710 on the chart. And I would say, okay, well, I'd love to enter a position a little bit closer to that level and see more support discovery there. And then we would place a stop loss, not an order, but sort of a mental stop loss below that 710 level. And importantly, rather than just closing out a position below 710, we would say, okay, well, we want to see a decisive breakdown to generate that closed position message. And so for us, a decisive breakdown would be something like a weekly close below 710, or maybe 3 days below 710. We'd have some kind of qualifier to confirm that indeed that support level has been broken, and the qualifier will be more specific to whether the position is short-term or long-term, things of that nature. But to identify that initial support level below which you don't want to see your position go, I think that's a great way to take out the emotional biases that come with some of these investments, and just keep yourself honest that if it breaks down, well, then your probabilities are now working against you. So you can always revisit a position lower, and we just wouldn't get married to them.
That is something I learned the hard way during COVID. I had Disney at 147s, and I held that puppy. I remember, and I'll share this one quick story. The chat knows this, but it was during COVID. It was during the 2020 crash, if you will. And I went to get Chipotle. I was leaving my house to Chipotle, and it's a 10-minute drive. I was down about $7,000 my position. I got to Chipotle. I was down 10,000. I got back home. I was down 15. So yeah, I should have let it go. Unfortunately, I didn't. And I'm glad you kind of mentioned this because yeah, that 710 does look pretty good in terms of having it. It has held support in that area in the past as well. And of course, for the folks at home, if you do want to go ahead and check out some more of Katie's thought processes, we'll put her link in the chat right there. Oh, and there you go. Look at that. It wants me to get out of here as well. But we went ahead and put that. Absolutely. Thank you so much for your time. I greatly appreciate it.
Of course. Yeah. Glad to join you today. Good luck with the show.
Thank you so much. All right, chat. We're going to go ahead and continue the show. Hopefully you got some good insights there. I'm going to go ahead and put an alert on that 710 just to see where we can go ahead and maybe bounce from there potentially for a swing trade or at least a day trade in that aspect. But we promised you some technical analysis. We delivered on that. Now we're going to go ahead and have a pre-recorded conversation with AKASH from Qualcomm.
All right. Well, thanks for that. I am super excited. We are joined by AKASH PALKHIWALA from Qualcomm. He is the Chief Financial Officer and Chief Operations Officer. AKASH, how you doing today?
Chris, I'm doing great, and I'm as excited as you are. Great to be here.
Awesome. Well, AKASH, we're talking all things artificial intelligence today during this virtual event. And I know Qualcomm has been growing in the AI space. I want to start with a question about diversification. For years, Qualcomm was known as a wireless company, but you've been diversifying. How would you describe Qualcomm today and in the future?
Yeah, that's a great question. I think we've gone on this journey of transitioning from a wireless company to a wireless and computing company over the last several years. Not only do we lead in all wireless technologies, but we lead on the edge on all computing technologies as well, whether it's the CPU or the GPU, video, audio, codec. We have all these technologies, and then we're best in class in my mind in the world. The transition that's happening now on the AI side is extremely interesting to us because I kind of see this as another opportunity for Qualcomm to transition over from wireless to wireless and computing to wireless computing and AI now. AI is just so integral with how computing works, with how wireless works, that we have this tremendous opportunity to drive the next generation of AI use cases in edge devices. And that, I think, is something we're all excited about.
Awesome. So Qualcomm, it sounds like, is establishing itself as a key player in AI. What is Qualcomm's role in AI today?
Yeah, that's a great question, Chris. If you think about AI, it's very much like computing. Computing happens in the cloud, and it happens on a lot of devices. So whether you look at the phone or the personal computer or tablets or cars or industrial devices, there's a lot of computing that happens in the edge, not just in the cloud. We see AI is following the same trajectory. It obviously started off in the cloud, but increasingly, we're going to see a lot of use cases where AI just happens on the edge in the device. And that has some fundamental advantages that you can't enable when you are doing AI in the cloud. And let me just maybe quickly go through that. The first one is cost. If you're running the AI use case on the device, you're using computing resources that already exist on the device. You don't need extra capacity in the cloud. And so that's a great way to kind of start running certain AI use cases on the device. The second is latency. You can run those very quickly. You don't need to go to the cloud and come back. Security, privacy is a big concern for consumers, and keeping your device, your data on the device is another way to run AI use cases. And then finally, there are certain use cases that can only happen on the device. Microsoft today at their event outlined several of those use cases, which I think is very exciting. And we're going to have a very large role to play as this transition happens of AI from the cloud to the device. And we're uniquely positioned to win on that.
Awesome. So AKASH, we know that there's lots of companies getting into the AI sector, including some semiconductor companies and some of your peers. Can you talk about some of the ways that Qualcomm is differentiating yourselves from some of your competitors in the AI space?
Sure. So, I mean, the most important thing is technology. And if you think about the cores, the technology that's in the chip that drives AI, You could run AI use cases on the CPU. You can run AI use cases on the GPU, and we can do both of that. But I think what becomes interesting is when you're running pervasive AI use cases, you're always wanting to do some AI use cases in the background. It needs to be extremely power efficient. And what we think is required for that is a neural processing unit, something that is dedicated to just running AI on the device and do it in a very power efficient manner. In the event today, Microsoft talked about their need for NPU in laptops, which is going to be one of the key ways to drive power efficiency and new use cases for personal computing devices. So we're excited about what the NPU brings to the device. Qualcomm is uniquely positioned to drive the NPU adoption. And this is something we've done for a long period of time. We already use the NPU for other technologies like 5G. And this expands us very significantly into a new set of use cases from a position of strength. So very excited. And it's something that is not just a phone conversation for us, not just a PC conversation. We're going to bring it to XR devices, to cars, to tablets, to industrial devices. It's something that's going to cut across everything that Qualcomm makes. And the scale of our presence across those devices is what drives an advantage over anyone else.
That's awesome. Yeah, exciting to hear more about Microsoft and their upcoming use of AI. So let's stick with that. How will PCs that are powered by the new Snapdragon X Elite leverage AI?
Yeah, it's a great transition that's happening in the PC. We're at this inflection point where we have a new generation of PC devices coming out. And Microsoft talked about Copilot Plus experiences, which kind of takes their cloud Copilot experiences, but then adds on-device AI to it, which drives the Copilot Plus experiences. And it just gives you a whole new set of things that the device could not do before. And I'm sure we can go into more detail on that. But where Qualcomm comes into play is the chip that we've built, the X Elite platform. We think brings three very significant advantages to the Copilot Plus PCs. The first is power efficiency. We're going to have very, very long battery life. It'll outlast the battery life of your phone, even if you use the PC all day. So it just puts you in a very strong position. The second is the fastest processor in personal computers and Windows PCs. We have a very strong new set of CPU cores that are being implemented in this new chip. That's going to give us an advantage. And then most importantly, all the AI use cases that Microsoft talked about, on-device AI use cases, will all be enabled by our NPU as well. And so we have a 45 TOPS NPU capability in these chips, and it comes across all tiers of devices. Unlike some of our competitors, which might eventually bring in this capability in premium devices, we're going to be able to do this across all tiers of chips that will come out with. So we're excited about our position there, and it's a new market, obviously a very large established silicon market that we'll be participating in now going forward, and we think as a leader.
Awesome. That's so exciting. AKASH, what can we look forward to in Qualcomm's role within the on-device AI revolution that we're seeing?
Yeah, the on-device AI revolution is fundamental to it is building a chip that can drive AI use cases at extremely low power, and that's a unique advantage for Qualcomm, as I said before. There are three set of use cases that you can think of. First is something that is called recall, which is have a device that has photographic memory that knows everything you've done on the device and can recall anything at all that you've done on the device immediately, because it is enabled by on-device AI. So that's the first one. The second is creativity. If you think about photographs, if you think about art, if you think about videos that can be created, you can use on-device capability to edit, to add, to clarify images and things like that. So there is a lot of creativity use cases that come with it. And the third is efficiency, things that you could do in the cloud or you could do with a CPU or a GPU. If you do it on the device, on the NPU, with our NPU, it's going to significantly increase the performance of the device, significantly increase the battery life of the device. And those are extremely important things to the consumer. And we're very happy to bring those to the consumer as a part of our platform.
Awesome. Well, AKASH, we talked about diversification in the first question, and we just talked about PCs. We talked about smartphones. I got to turn things back over to automotive, because we know that Qualcomm just had another incredible consecutive growth quarter for the automotive sector. What's most exciting to you about Qualcomm's diversification in the automotive sector?
Yeah, the automotive industry, as you know well, is going through two transitions in parallel. There is a digitization of the car happening, and then there is electrification within the car. Qualcomm is very much tied to digitization change that is happening in the car. And so whether it's an internal combustion engine or an electric car, what you're seeing is the consumer experience inside the car is being completely transformed with the way the systems are being built, the digital cockpit systems are being built within the car. They're more like a phone-like experience. They're more like a tablet-like experience, and it allows you to digitally control various things that happen in the cloud. The cars are also becoming connected to the cloud, which is an advantage for us. And then finally, ADAS is a key set of features that are coming in level 2, level 3, which allows the consumer to use autonomous driving features to make the driving experience easier and safer for the consumers. And we bring that to the cars as well. So we're tied to this incredible transition, once in a lifetime transition that's happening in cars. And we're probably the most important enabler for these car companies for this transition. So very happy to be a partner to all of them and be a great supplier as we go forward.
Well, you guys heard it here, once in a lifetime transformation for automotive. That's pretty exciting. AKASH, I want to thank you for your time talking all things AI and automotive with us today. We look forward to hearing more from Qualcomm soon.
Chris, great to be here. Thanks for having me.
All right, let's kick it back over to the studio for our next guest during this AI event.
Sweet. Thank you so much, Chris. Thank you so much, Akash, for that great interview. There's, so many companies, the best ones are ones that are able to kind of pivot with what's happening in the world. And, Qualcomm is one of them. And so is this other company that we're about to talk to just now. I want to now welcome Pete CARLSON, who is the CEO of Spectral AI. Ticker is MDAI. Pete, welcome to the show.
Thanks, Sunad. Good to talk today.
Man, there's so many things for us to cover. I know you've got some things to share as well, but for the folks at home that might not be familiar with the company, give us a quick overview.
Sure. Spectral AI uses artificial intelligence to provide a predictive diagnosis on the outcome of a burn or a wound. And we do that through multispectral, patented proprietary multispectral image capture that is then used to inform and build an AI database. And that database, run against an algorithm, is what provides the diagnosis for the burn outcome.
What are some trends, right, that you're seeing in the AI healthcare space that folks should kind of look out for? What are you seeing from a bird's eye view?
Well, we're seeing the power of data and just how much there is. And this is AI, this is machine learning and AI, where you are using a closed loop, not an open loop, but a closed loop to perform an immediate assessment of the wound healing possibility. So you are, we've captured over 340 billion pixels, and the assessment can be handled at the pixel level. That's a lot of, I think I said 340 billion, but that's a lot of pixels.
Yeah.
And it is the power of the tools like ours to leverage that much information to provide diagnosis support and diagnosis direction to healthcare professionals. What we're also seeing is how this provides equity of care across the ecosystem. So in burns, for instance, there are a limited number of burn experts in the country. There's only 125 burn centers, but burns happen everywhere. And so our tool will allow the general practitioner, a nurse, a practicing nurse, whomever, out in the field, out in emergency departments, far away from those burn centers, to make a quick and an accurate diagnosis of a burn. That's important because then you're using the best information possible at the source, and you're not sending a patient to a burn specialist if they don't need to go. And it's using your question about how is AI helping? It's helping people make better informed decisions more consistently and quickly.
I didn't know that's how few burn centers there were. You said 100 and some change, I believe, and that's a little surprising to me. But you mentioned AI and kind of helps you make better decisions, and that's true across a lot of different things where AI is played, right? So if like a content creator, something that's a little different than obviously what you're doing, wants to go ahead and figure out, hey, what should my content game plan be for XYZ? They can just have AI spit out like a calendar of how to kind of work. So it's amazing what AI can do. There's so many, feel like companies that are in this space, whether it's in the AI space or whether it's in the healthcare space related to AI, what would you say your competition and kind of gives you an edge over your competitors with what you're doing here in the healthcare space?
What we think about is being a unique situation where we have both the multispectral high quality image capture and the depth of the database along with the predictive AI algorithm. And it's the combination and the breadth of all those three. It starts with the image capture.
Yeah.
Spectral AI is because of the spectrum of information that we gather. And starts at near ultraviolet, goes through all the human visible light waves, and then goes to near infrared range. So that breadth, it's 400 to 900 nanometers range of wavelengths that are captured. And what that does, among other things, is allows depth perception too. So our device is able to do 3D representation of an image, and that's what allows the very robust comparison to the database of known healing or non-healing wounds. And again, what's unique, we feel, is the complete package of capturing the image in that quality, the depth of that database, and the algorithm that can quickly compare those two.
I want to talk about revenue here in a second, but I want to also talk about security. There's so much data, there's so much information. How do y'all make sure that, hey, it's protected for the consumer on the other end and their information is guarded as well?
Yes. One of the things we're doing is the device is standalone. So this tool is, essentially in a PC hard drive that is in a cart, and for a variety of reasons, security being one of them, that's not tied to the web, for instance, or to the cloud. We will go get the information. We get that. We will continue to build and leverage that information, but that's part of it. And then we have all the appropriate safeguards that you would expect around it. It's obviously very important to us to have that protected.
Yeah, absolutely.
And then we will also use electronic health records, and there's all kinds of controls around that.
So a company's main point is to go and increase the revenue for the shareholders. So let's talk about if folks at home can kind of expect commercial revenue here in the near future or in the long term.
Yes, we are. We have several ways that we're looking at revenue opportunities. Our largest and our primary product is the burn indication here in the U.S., and we're in clinical trials on that. We do need to go to the FDA to get approval, and we think that would happen over the next 12 to 18 months. And so we are looking to have that device in the field generating revenue sometime in 2026. Separately, we are also in the UK and have already received regulatory approval in the UK. So we have devices in the field going through customer valuations.
Yeah.
Coming out of those valuations, we expect to have commercial transactions later this year in the UK. We're also looking at diabetic foot ulcers, and it's a similar thing. We actually think we can go through the process in the UK a little sooner. And so that would be revenue sometime later next year. And then in the US, with approval of a burn indication, we can then work on approval of the DFU in the US. And what we've said is we expect all four of those channels, if you will, 2 products, 2 countries, to be active from a commercial standpoint late 2026. But we start soon with the UK revenue.
If you get the approvals that you're looking for, is the company prepared to kind of scale? Because oftentimes what happens, and I'm not saying this about your company, just in general that I've seen in the markets, is the demand comes in, but then the team and the company isn't ready to kind of jump on the opportunity and to optimize what the supply just isn't there. So is your company kind of ready to scale when you get those approvals and when the growth comes in?
Sinad, we are ready, and we have added a chief commercial officer and are doing the work to be ahead of getting into the market. We're doing the market studies. We're building the team. We work with a third-party manufacturer that is more than capable of supporting our expected demand, and we are putting all those resources around it. So yes, we've been in existence since 2009, and since 2013, we've been working with and funded by an organization within the federal government known as BARDA, the Biomedical Advanced Research Development Authority. And they have funded us over $110 million to date, and they have awarded us contracts totaling over $250 million. So we've been working on this a long time. We have a great partner to work with us there. They want to see us be successful. And so we are ready to ramp up for our commercial opportunities.
I'm glad you brought that up, because money was going to be the next topic of how you're kind of getting this funded, because it's not cheap to have these operations. So I'll move to my final question then, to talk about the company's IP profile. Give us some insights there, and then any final thoughts you may have.
We have an extensive IP profile, including trade secrets, but we have 27 active patents and another 30-some pending. These are both domestic and outside the U.S. We work with the best and brightest in this area. One of our longest shareholders and our largest shareholder is an IP expert and helps us get access to all the right resources there. So we're very comfortable and proud of the IP that the team has developed. It's all organic and it's all wholly owned. And what I would say is we feel like we have a product here that is going to allow us to make healthcare more effective and more efficient overall. And that's best for the system, patients, payers, everybody. And we look forward to bringing this tool to market and providing that into the system.
What's exciting is the government getting involved in helping, right? You kind of mentioned a little bit about that in terms of funding and any other grants that may be in the future, whatever the case may be. But this is obviously, AI is here to stay, no question. Right? Everyone kind of compares it to the .com situation. And whether we get a, market recorrection or whatever the case may be, the technology is here to stay. There's no question in denying the better decisions you can make, but also faster decisions that you can make, which, let's be honest, in the healthcare system and the healthcare aspect of it is very, very crucial to have the accurate data so you can make an informed decision in what's in front of you in a speedy manner. But thank you so much for your time, Pete. I really appreciate it.
Thank you. I'd have a great day and enjoyed being here at the conference.
Absolutely. That is Pete CARLSON, who is the CEO of Spectral AI. Ticker again is MDAI. Healthcare space, very important to kind of utilize the best tech that we can possibly have. So it's great to see the work that they're doing. We're going to go ahead and move on to a pre-recorded conversation that I had with Stephanie Link. She discusses AI, but also towards the end of it, it's a new position that she has put on, which is not related to AI. Here's my interview with Stephanie Link. A great privilege I have to go ahead and have this next interview with Stephanie Link, who is the Chief Investment Strategist and Head of Investment Solutions with Hightower Advisors, which, by the way, the Head of Investment Solutions aspect has $5 billion under asset management. Stephanie, welcome to the show.
Thanks for having me. It's great to be here.
Absolutely. So many things are happening in the world of AI, but there are also other themes that I kind of want to focus on as well. But with AI, NVIDIA just kind of reported earnings. This conversation you're having is on May 23rd. What are your thoughts? I mean, they gained what, 250 billion in market cap in just one day, up about 10%?
Well, the reaction is definitely a surprise, just because headed into the print, it was up over 90%. And there was a lot of support for it, and a lot of people own the stock. So to have it up another 10% was really incredible. But it's not all that surprising, the big picture, because the hyperscalers told us how much money that they were spending on cloud and Gen AI. I mean, the four largest hyperscalers are going to spend $177 billion this year, up 35% year over year. And the global hyperscalers are going to spend something like $225 billion on these very initiatives. And so with all that spend going on, obviously, NVIDIA benefits substantially, given that they're the dominant data center company with the technology that everybody wants but can't get enough of. But there are also other players too that will benefit. And so I think it's kind of this halo effect over the semiconductor sector, in that I don't want to say it's different this time, because I'm very hesitant to say that, but it is very exciting. And so could we at any given time see a 5, 10, 15% drawdown in these stocks in the sector? Of course, maybe even more. However, I do think that setup would be good and it would give you a buying opportunity. I think we're in like the second or third inning in this whole thing. And what's interesting to me is it's not just the semiconductor companies. It's also, if you listen to some of the industrial companies that have anything to do with power, grid, data center, of course, all around AI, they too are benefiting. So it's companies like Quanta Services and Eaton Corp and GE Vernova. Those stocks were also up when NVIDIA reported that day because they will benefit. One of the comments I heard on Quanta Services conference call from the CEO was that the amount of power that is going to be needed for a data center is, quote unquote, mind-boggling. Like, I've never heard a CEO talk like that before, especially on the industrial sector. So it's exciting.
There's so many things I want to hit on, which you already have in terms of my notes, but like, you have AI chips that everyone is kind of focused on. The next theme to me is also data centers, which you went ahead and on. So I went ahead and talk about the third theme, which is cybersecurity, right? There've been often talks about how the next real threat, not just America, but also worldwide, is in the cybersecurity space. And now you have AI, which is collecting so much more data, not just in our computers, but also in terms of our cars and EVs and everything else that we're not even thinking about yet. What are your thoughts in terms of, hey, are there opportunities to play the AI gain momentum wise, maybe in the cybersecurity space?
I think that cybersecurity is just as big as AI. And I know that's a little bold because we can throw around total addressable markets in the trillions. Who even really knows? But my thought is whenever, and what we're seeing is whenever you see these companies, these cybersecurity companies themselves that are having cyber attacks, that's worrisome. I mean, that just tells you the level of sophistication that these companies have, that they're going after, and that the technology just isn't exactly right just yet. And so I've talked to a couple of different CIOs and CTOs, and they basically over the last several years wanted to have multiple vendors because they didn't want to be hostage to one or two companies and get, kind of the pricing mechanism out of whack. And so they now, though, are saying they want fewer vendors because all the vendors that they have, they don't talk to each other. So nothing's really working. And so what I think you're going to see in the coming quarters and years is massive M&A consolidation. I think the 5 players get bigger and bigger and hopefully better. But I am there with you 100%. I think this is it's sad to say how big of a market it is, but it is what it is.
It's one of those things where unfortunately the world is going to do what the world is going to do. Our job is to look at the opportunities that the charts and the companies provide. Speaking of companies, let's talk about Snow, right? You tweeted this out earlier where you said encouraging steps under the new CEO, no doubt more to come. And of course, when Snow reported that there was going to be a CEO change, the stock dropped. And I know that because I owned some of it and felt like I had to grab some ramen maybe after the reports came out. But the product revenue has been up, right? 34% year over year. Billings are up 10%, as you mentioned as well. What else are you expecting from a company like Snow? When it IPO'd, everyone loved it, right? It was doing fly high, skying everywhere. Now it's kind of come down back to earth. What are your expectations for moving forward?
So 2 quarters ago, when the stock fell substantially, and it's actually down 30% from when it reported that earnings, that was 2 quarters ago. I understood why. The expectations were really quite high. You had a disappointment in terms of product revenue growth. They guided lower on product revenue growth. You can't do that when the stock trades at 15 times sales. And as you mentioned, they had a change in the CEO, and no one knew who this new CEO was, even though he's very well known in the industry and had spent decades at Google. Fast forward to yesterday and or last week, their report. I would just say that the quarter itself showed stability in their core data warehousing business. That's what I wanted to see. So yeah, you mentioned product revenue growth was 34%. It was 5 points higher than expected and higher than the whisper number. Daily query volume growth accelerated to 5 billion. RPO growth at 46%. You mentioned bookings up 11%. All of this, again, shows stability and good growth. The stock was down, though, because they're saying they're going to increase investments, and operating margins and free cash flow margins will be down 3 points from expectations. That said, they still raised product revenue growth. And in my mind, I'd much prefer a company to be increasing revenues and investments, rather, in an environment where their business is stable or strong. Yeah. You can say it's competition, and that's the reason they have to spend. I don't really care. They should be spending. They are generating free cash flow. And oh, by the way, their free cash flow margin, now the new number at 26%, that's still eons higher than the industry at 19%. So I like it. Now I feel comfortable. I know it's down a lot. Now I feel comfortable buying it here because I do think the setup into the second half of the year is, and oh, by the way, I thought the CEO did a great job on the conference call too.
And of course, the cash flow and the margins also help with your last comment on that tweet, which is can't imagine M&A not a real possibility over the long term as well. Care to shed a couple of sentences on that thought?
Well, I would say that I think they will do M&A, and there was all kinds of rumors that they were going to do some sort of a really big deal. I'm not sure that they're not going to be acquired, to be honest with you.
That's what I was thinking. Yes.
That was the implication I was trying to make on Twitter. I just can't imagine a company not wanting what they have. I mean, they have 9,000 customers. Their net new growth was up in terms of customers, up 8% this quarter. Yeah. So I don't know. We'll have to see. Maybe it's wishful thinking on my part, but I do feel good about the fundamentals.
Me and you both. Steak will be what I'll have when they go ahead and get bought out. If they get bought out, just you got no SEC stuff here. But speaking of, acquisitions and what could happen in that world, let's talk about Apple, which I believe you purchased more of. And again, as of this recording on May 23rd, it's about a 7.5% part of the portfolio. Correct me if I'm wrong, compared to the 6.5% that's weighted in the S&P 500. But I also want to talk about Lam Research, something else that you went ahead and purchased as well. So is this just another way for you to play the AI names that you feel like might be lagging and might have more opportunities?
Yes, it is. And that's exactly right. So I do not own NVIDIA in full disclosure, unfortunately, but I do own Broadcom and I do own Lam Research, and they are both plays exactly on what we were just talking about. They too are beneficiaries of all of this CapEx spend. And I just think they're not as appreciated as an NVIDIA. And so I do think there's opportunity in both. So for Lam Research, not only do you need 6 times the memory for AI, but also we have not yet seen NAND recovery in wafer fab equipment yet. And I think this summer you're going to start to see an inflection and into 2025. So maybe we have to wait a little bit for this really to play itself through. But I do think the visibility is excellent. And it's also lagged. It's only up 22% year to date. I mean, only 22. It's still pretty good. But we know the SMH is up 32. On Apple, it got so hated. It really did. And you had downgrades, and you had people, people are selling Apple to buy NVIDIA because it's a source of funds. I just think it's still down 5% from its highs. And we know the challenges with the top line. We know the challenges with China, but we also I don't think are appreciating services. So last quarter, services as a percentage of total revenue was 26%. The prior quarter, it was 19%. So it's increasing as a percent of total revenue. It's still small, but it's growing, and it's growing double digits. And I just think it's the juggernaut that might be underappreciated. And in the meantime, the 10Q operating margins in every single region were up, except in China. We get it. We know they're being price selective there, but that's pretty impressive. And so you get WWDC in June. Maybe we get some AI news, and then you have the iPhone 16 cycle. And so to me, I just think it makes a lot of sense. And oh, by the way, companies buying back 110 billion of their stock, I want to be buying along with them.
100%. That's what I was going to say. When people don't believe in you in terms of Apple and your stock's down when everything goes is riding, what do? You believe in yourself, and AKA you go and have your record buyback. And in terms of Lam Research, cheesy comparison, but NVIDIA is kind of like your bride and groom. You went to the wedding, but it's a groomsman that you kind of pay attention to just to see what's available and who could be up next. That's the way I like to take a look at it, and how I convince myself to maybe buy some of those lagging stocks. But any final thoughts in terms of the AI space? Anything else that you were kind of hoping to talk about, or anything anything else on your mind? The floor is yours.
I will tell you a new position for me, and
Yes.
it's not tech, and it's not technology.
Okay.
But it's India. I bought the
I saw
iShares.
that.
Yeah. I just, here's the thing. I think everyone's, we're all fixated on the Fed and what the Fed is going to do or not do. I do not think they're going to cut this year because I think growth is above trend, not only here in the States, but also around the world. China's growing at 5.5% in GDP. India's growing 7%. The Eurozone just put up its 5th quarter in a row of better and above 50 in their PMIs, which means expansion. So you've got global growth that is accelerating. And I want to, not only is the US market broadening out beyond tech into other sectors, I want to be a little bit more broader within the rest of the world. And India, we know, as I mentioned, they're growing pretty fast. I think their earnings are going to come in at something like 15% for the next several years. We know they've got favorable fiscal policies, favorable demographics. They have the largest population in the world. And so to me, this particular ETF was the way I wanted to play it, just to have diverse exposure. It only has the 132 names, though, so it's fairly concentrated. And Reliance Industries is the largest position within the ETF, and that will benefit from power gen, energy, grid, infrastructure, all that stuff. And so that's a fairly new position. It's not as exciting or as sexy as technology, but I kind of find it fun.
Well, I mean, look, if you look at the Twitter handle, I think it's obvious where my pride lies in that aspect of it. And I feel like India was so much more so looked at growing up of like, oh, you want cheap jobs and want to improve your margins? Call center, you go to India. But now with Tesla possibly looking to do something there, with Apple possibly looking to do something there and starting those conversations as well, it's clear that there's a kind of a tide turning between who's really going to start dominating in the Asia side of things here in the next few years. So I love that pick, especially when it comes to travel. I think that's something that we can also kind of take a look at. But thank you so much. This was a very fruitful conversation. I love the insights that you provided here as well.
Thanks so much for having me.
Absolutely. You got it. That is Stephanie Link, who is a chief investment strategist and head of investment solutions at Hightower Advisors. All right. Hope you guys enjoyed that interview. Got some good insights, and we promised you a new position that she has in India towards the tail end of that conversation, which again, I am a believer in outside of different reasons. But we're going to continue the conversation here with Jeff and Justice. We want to go ahead and cover AI from all different sets and angles. So Jeff, Justice, welcome to the show.
Hey, good to see you again. How's everything going?
Everything is great. And I know, Justice, you're at the airport, so we appreciate you taking some time to kind of hang out with us. There's so much to talk about in terms of AI from all the different angles. So I appreciate both of you for being on today. Jeff, I'll kind of start with you. In the AI space, give me like your quick thoughts. There's so many things happening. Did you think AI was going to really ramp up with the technology that it has since ChatGPT like a year or so ago?
Yeah, actually we did. My firm started really looking in and drilling into AI about 4 years ago, believe it or not. We actually just made an investment yesterday in an AI company that we started actually doing due diligence on 4 years ago.
Wow.
The technology is out of Australia, believe it or not. We moved one of the founders to Miami because Miami is becoming such a tech hub. So they just made that. The company's called YBot, super cool company. But yeah, we have been anticipating this for over 4 years. And we have been doing a significant amount of due diligence. We've looked at just literally in the last 90 days, probably 350, 400 companies we've reviewed just in the AI space. We just made one investment yesterday. So, it's a very crowded space. Lots of things I think investors need to worry about, or think about, I should say. But yeah, definitely with computing power the way that it is right now, final thing I'd say on it, 5 years, you're going to wake up, you won't recognize anything that's around you.
4 years to invest in a company. Remind me to never have you do my background check. Lord knows what you would find in that big old time span.
Yeah.
Justice, I'll come to you because speaking of investments that Jeff kind of started off with, you went ahead and invested in Rain AI, which, correct me if I'm wrong, Sam Altman went ahead and backed.
Yeah, absolutely. It's funny. Before I got to the airport, I just had lunch with the CTO and co-founder who also went to US. So yeah, I mean, I think as far as the future of AI, it's hardware. It's a hardware play. So the biggest bottleneck for AI is the cost to compute, and this comes down to the cost of energy. So, they were saying companies like OpenAI will be using, as much energy in the next 5 years as small countries. And that's the biggest bottleneck and biggest cost. So we invested in Rain AI, which is known as the world's most energy efficient AI hardware. 20 times more energy efficient than the current NVIDIA GPUs. And what they're building is called in-memory compute. So if you were to think about, a laptop or any device, there's your computation, which is the processor, and then there's also the hard drive, which does the memory. Now, if you were to think about the most efficient computation device ever created, it's the human brain, right? It does both in one system. So that's exactly what they're building with in-memory compute. It not only does computations, but it does storage and memory all within one device. And we believe that this is the holy grail. We believe that this is going to be the future of AI, and it's all hardware based.
And with the brain, you also have the subconscious side of things, which we don't really recognize why we make the decisions we make, whether good or bad, but it's there. It's part of the formula. It's part of the way that we think and what we believe is happening. I watched this podcast where it talked about like your gut is so accurate. If you can figure out the fear aspect of your gut, take that away, and just kind of the intuition and what it's kind of telling you, because it's taking those subconscious metrics into the decision making. But coming back to you, Jeff, where are we in the space of AI? Like, are we ordering the Uber? Are we in the Uber? Are we in the parking lot? Is it the second inning? Like, how early are we to this space?
I think from a consumer perspective, we're in the early stages. I think from a development perspective, like behind the curtain, there's a lot more going on than any of, probably 99% of the population on the face of the planet actually understands. But again, I think one of the other things, just to kind of piggyback off of Justice, and I don't know if you know this, but Justice is like my little brother, so we're very, very close. But the beauty of you having both of us on here is from an investment perspective, there are, some differences, right? So OneSixOne is focused on the hardware, where Fuel Venture Capital, we don't necessarily lean into the hardware side of things. We like to be much more asset light than anything else. And the other thing that we like to think about is, to predict the future, you really have to understand the past. So when you ask me that question, one of the things that I would say is, let's look at the internet back in the, in the late 80s or early 90s and understand what took place there. You had the hardware, which I think is what we're doing right now. I call it the big infrastructure play. So the infrastructure of the internet got built out, but what ended up being a massive opportunity for investors was the software side of things. The application layer is what we like to call it. So at Fuel Venture Capital, what we're saying is, look, this infrastructure layer is really being dominated right now. And quite frankly, in our humble opinion, the valuations are not investor friendly for our firm. So what we're really spending a ton of time on, like I already said, we're looking at hundreds of different companies, and that is the application layer. And where can we come in and be early in that life cycle to take advantage of what we think is going to be coming, based off of understanding what took place in the past with respect to the internet.
But here's this question though, Jeff. You mentioned it's not, investor friendly, especially for something you might be taking a look at. You've got the money, the resources to kind of figure out, hey, here's where we may want to kind of dive into, right? You mentioned you did research on a company for 4 years before you decided to invest in them. For the common, John and Jane that's kind of watching at home, what would you say to them in terms of, hey, here's opportunities that they can possibly take a look at, right? If someone's got money ready, whether it's now, in a year, 2 years, whenever we get that .com type burst, if we get it, don't want to predict anything, what would you say to them, folks that feel like they've missed the boat of this AI?
Yeah, I think it's a great question. I think you always have to compartmentalize it into private investment versus public, because they're very different.
Yeah.
On the public side, what I would say to a public investor is, you haven't missed anything, because the opportunity right now is, go buy some Apple stock on a dip, go buy some Microsoft stock on a dip, go buy Google on a dip, because those three massive companies, right, the Magnificent Seven, they're one of the three of the seven. Those companies are investing significant amount of capital into this space, and they're for sure going to be a massive player in this space moving forward. So if you're a public investor, I think the opportunities are significant, and it's also quite diversified, right? Those three companies have a lot of different business lines, a lot of different revenue sources. This is just one. It'll play a massive part of their future, but I think it's a really safe play. On the private side, I think that what we've seen in the private markets, and I'm sure Justice will agree with me on this, but over the last 18 months, we went into the first bear market that we've seen in 15 years. I think, when it's a bull market and you kind of can almost invest in anything and do pretty well. But when things get tough, I think what private investors start to realize is, this is a full-time job. This stuff is difficult, right? I mean, I used to be a senior executive, one of 6 that ran Merrill Lynch Wealth Management. That was a walk in the park compared to what I do today. I mean, this is all hands on deck. And so I think what investors in the private side are starting to realize is, hey, identify some great, portfolio managers at a boutique firm, not the really large firms, because you're just going to get diluted. It's not really worth your time. That's my humble opinion. And, find a boutique firm that you align with, that'll allow you to get really connected to the companies that they're investing in. And that's how you would take advantage of that. Now, obviously, you'd have to be an accredited investor to be able to do that.
Yeah.
But that's really, in my humble opinion, where you would want to go, because it is a very difficult marketplace. Private market investing is largely on momentum, and people get this fear of missing out, and they make a lot of mistakes. Like I told you, we spend a lot of time in due diligence. We take our time because we're responsible for other people's money. And, I think individuals who don't have someone like Justice and myself in between them and the ultimate investment sometimes look back and say, what the hell was I thinking?
Justice, I'll kind of turn the question, same one, over to you. I'm sure you have friends and family that are like, hey, man, like, where do I put my money in this AI space, right? I'm sure you get that a lot. What do you tell them?
He tells me to call Jeff Renzel at Fuel. I think that's what he's going to say.
There you go. There you go. Great answer. But what do you say to them, Justice? Like, what are your thoughts in terms of folks that feel like they may have missed the train? Same exact question to you, especially from the hardware perspective.
Yeah, for sure. I mean, I totally second exactly what Jeff said. I mean, in the private space, there's really nothing that, I mean, all the opportunities in the private space. As far as the public, I mean, they haven't missed out on anything. And, all my friends and family, I'm from Cleveland. I know you guys are Detroit-based. I mean, they're trying to buy a bag of chips. They're not thinking about the next stock.
Yeah.
But yeah, I mean, as far as what I truly believe, a lot of what we're doing, investing in the infrastructure for AI. So, the 49ers, they were named after 1849, the gold rush. We think that we're in a second gold rush right now. And the people who are going to make money in this next gold rush aren't the people who's trying to find the gold, a lot of these companies, in my humble opinion, are going to be, their lunch is going to be eaten by OpenAI. It's just another product feature that they're going to launch tomorrow, and all of a sudden you no longer have a business. And what I think is the money's all going to be made in the picks and shovels. All the people who are coming out, we're trying to build the infrastructure and the foundational layer for people to build upon and enable AI. Because, I'm not going to be able to pick what's going to be the next layer on top of whatever else is going to be out there. I want to invest in the foundation that's going to enable every other business, regardless if I'm right or I'm wrong. I want to help those companies tomorrow solve their problems.
We have a saying here at Benzinga where it's like, you want to invest in the thing behind the thing. So pretty much what you said, right? You've got the gold rush. Let's, invest in the picks, and, you've got rain happening. Great. Let's go ahead and sell some umbrellas, or better yet, let's short some sunscreen. So speaking of taking a look at the other angle of it, I'll start with you here, Jeff. Security is a big thing. I brought it up with a couple of my guests in the past of this show. So much data is being collected, not just, in terms of the conversations that we're having, in terms of data that's being pulled with OpenAI and ChatGPT and everything else, but also when you have autonomous, vehicles that are possibly going to be in our future mainstream wise, that's data that's being collected. You have to worry about hackers and everything else. What opportunities are you seeing in that space, or any worries that you have? However you want to take that question. And Justice, I'll come to you with the same one after.
I think that everyone from an investment perspective needs to understand, and I said this earlier, right? 99% of the population just honestly has no idea how fast the world is moving right now. You just mentioned autonomous vehicles are coming, but autonomous vehicles are already here. I mean, if you live in Phoenix, Arizona, you drive by a car that has absolutely nobody driving it and a passenger in the back seat, and they're everywhere, right? If you go to Las Vegas and you do a ride share, I'll leave out the names of the companies, but you don't have a driver there. So that technology is here, and quite frankly, that technology is almost considered to be old technology compared to what's really
Isn't that crazy?
Yeah.
Isn't that insane? As soon as I said, technology's here, I remembered, hey, you already have this happening in Phoenix and in California. I just live in Atlanta, so it hasn't quite come out to the East, but it's mind blowing. I was talking to Paul Chang, who, the folks will hear the interview here in a few minutes. And he talked about how I think I asked him like, hey, where's the company going to be in 5 years or something like that? And he's like, dude, 5 years in technology, like who cares about that? We're talking 6 months to 12 months, how we're going to grow.
Yeah. And I think that people need to really understand that. I mean, we have quantum computers now, in Google's backyard that can solve, mathematical equations in 90 minutes that would take every supercomputer connected together around the planet to solve in a year. That is serious computing power. And what I would say to your question is AI is going to play a part of every vertical that is out there. It doesn't matter if it's cybersecurity. I agree with what your guest said, however. Cybersecurity is a very, very important vertical of its own, but it's going to have components of AI. I mean, yesterday, and you guys did a great job of announcing this on your show, but OpenAI and PwC. I mean, Apple and OpenAI. I mean, you just start to think about the inferences of that. I mean, Apple doing a deal with OpenAI, basically, they didn't say any of this. This is 100% conjecture on Jeff Ransdell's perspective. But the message to me is there's going to come a time in the very near future where Google's no longer, a part of the Apple system because they're going to be using, an OpenAI interface. I mean, everything is going to be changing. And I think, I was on a panel a couple of weeks ago for a group of leaders in Miami, and someone asked me the question, what should we be doing with our children? How is the world really going to look differently? And I said, well, if it were me, and you are asking me the question, I would be having conversations with young people today about, being really focused on that interpersonal type of a relationship, like what you're doing with us right now, sales, all those types of things. But anything that's analytical, I mean, if you're an attorney, if you're a CPA, a CFO, if you're, these are things that are going to, really be probably best suited for a robot to be doing. And it's not going to take very much time. The world is really, really changing. It's super exciting because, piggybacking off of what Justice said in this gold rush. I mean, if we could go back in time and all make incredible investments when the internet was just coming out, I mean, the three of us wouldn't even be on this call right now, right? We'd be on the bow of our super yacht in Cannes or something like that.
Justice is in Tampa. He might have just done that. I don't know.
No. Justice is not. Justice is a Miami boy. He's a 305 venture guy. His office is just down the hallway from mine. He is not a Tampa guy.
Well, can't wait to get back.
Justice, give me your final thoughts. What are your thoughts in terms of AI wrapping this conversation up? And then Jeff, I'll get your final thoughts as well. And I will say this real quick before I come to you, Justice. I remember, growing up, everyone talks about how like your parents, right? It's like, oh, we didn't have this back in my day, yada, yada, yada. And I was like, I don't know if I'll ever say that because everything we wanted, we kind of have in front of us. But then AI is like, nah, buddy, watch this. You know what I mean? So it's mind blowing how we'll be able to keep up. And you mentioned the interpersonal, ability to kind of connect. And I was reading, I don't know, there's like an article or something like that, but how we're like in this loneliness epidemic where everyone's just kind of remote and they're not really able to connect with human beings. And it kind of impacts them. People love remote work, but then when you're confined in these four walls for a long period of time, it can definitely have that subconscious damage that we may not be thinking of. And I think it's great that you brought that point. Justice, final thoughts for me before we wrap here and go to Jeff.
Yeah, so you were talking about data and security, right? And it's funny you were talking about, when you have kids, you're like, oh, back in my day. And this is also similar to what happened in Africa, right? In the majority of Africa, they never had landlines. They leapfrogged straight to mobile cells. So, I mean, what's going to happen, people don't even know how fast this technology is moving and how it's going to leapfrog. So a lot of the data and security that people are thinking about now, this is all going to be localized in what's called edge computing. Right. So all of the data is going to be localized to the device. It's no longer going to be transferred from device to cloud and back and forth. Yeah. So the way that you're thinking about data and security is completely going to change because all of that data will be localized to one device. And this is the future. I mean, this is called edge computing. And, your robot's no longer going to communicate with some cell tower or some, data center in San Francisco. It's going to have all that data and security and learn on the device itself. So I think that people are going to, obviously try and crack down the hardware side of things and try and, make robots more efficient from being hacked. And but yeah, I think that data and security is going to completely change in the same way that, the landline, people never had landlines, they went straight to mobile devices. It's going to completely leapfrog, and this technology is going to shift everything that we know and flip it on its head.
Yeah. It's just, you mentioned the edge aspect of it. Like, I'm into sports betting, and I know how much that 2% plus EV can really play in your favor in the long term. Vegas was built on having like a 2-3% edge in terms of blackjack and different things like that. Jeff, final thoughts for you before we wrap?
You should download Better.
It's a great company. You got to download the Better app. I'm using this opportunity. The Better app is an incredible.
I got it. Say less. You tell John Lee.
You are the man. You are family. You are family. I love it. You got to get your butt.
Wait till you see how much I've lost.
And I'll host you. You can do these shows.
I love it.
So anyway, my final thoughts are, first of all, thank you for having us on. It was amazing.
Absolutely.
I love my friends at Benzinga. We go back a long ways. I love what you guys do. And I think my final thoughts would be this. Everybody watching, my challenge to all of you is, don't be one of those individuals who lets time pass them by.
Yeah.
Time is no longer any of our friends. We have to make sure that every single day we're reading and we're learning about what is going on, because if we don't, I really mean this. You always hear people talk about, well, you can get left behind if you don't figure these things out. You've got to be a part of everything that's going on right now. And, if you're one of these workers that think that things aren't going to change, you really need to understand that is probably the worst strategy in the world right now. You've got to show value, because computers are going to change a lot of different things. I was talking about Ybot. That's a machine prompted, human generated AI. So just think about that for a minute, right? That is a computer asking me questions that I'm actually just kicking out as I'm driving in the car or I'm in my Uber, and all of a sudden the AI is computing everything that I need to do, and by the time I get to work, the work is already done. The world is changing. I've said this now 5 times. It's just moving very, very fast. And my encouragement to everybody is, make sure that you've got a seat on the train.
Yeah, amen to that. And I think, they've really got to kind of keep in front of the information that they're getting so they can make those investment decisions, because their opportunities are going to happen, right? Kind of brought up the sports betting references. And I would always be like, oh man, I missed this plus EV trade because I was on date night. It's okay. Sports are still going to be played, right? Stocks are still going to be here. Investment opportunities are still going to be here. The FOMO that you talked about is not something that you need to kind of rush into. But thank you both so much I appreciate you taking the time. And Justice, I'm really glad you have TSA PreCheck. I hope at least. And I'm glad you could join us from the airport, man.
All right.
Thank you so much for having me.
Thank you for having us on.
Absolutely. We'll connect and we'll stay in touch. That was, that amazing conversation. So many different aspects for us to cover. And hopefully you guys got a little bit of insight from that. We're going to go ahead and have another pre-recorded conversation with Kedar from Qualcomm. Check this conversation out.
Hello, I'm your host, Carolina Milanesi. I'm a tech analyst at Creative Strategist, and today we are going to be talking about AI PCs. And to do that, I have the distinct honor to have Kedar Kondap with me today. He is SVP and GM of Compute and Gaming at Qualcomm. Thank you for being here today, Kedar. I know that you've been super busy in the past couple of weeks for these little things that is called AI PCs.
Thank you, Carolina. Thanks for having me. Yeah, it's been a fun week.
Absolutely. Well, a couple of weeks now. Let's start with the role of Qualcomm in this big opportunity of AI PCs. Obviously, a lot of both consumers and businesses know Qualcomm from the mobile ecosystem. And now you're entering very strongly into the PC ecosystem. Tell me more about this adventure of yours.
Yeah. So Carolina, obviously we come from, as you highlighted, the mobile legacy and the mobile era. And so as an organization, we've always been very focused on driving devices that people are used to carry around. And so it seems like a very natural transition for us to be able to go from mobile devices or phones into PCs. The biggest advantage here is obviously we come with the legacy of driving battery life, which is incredibly important for any mobile device. And we've been able to build assets over the last many years that help us bring some excitement to PCs. So, for us, it's a very pivotal moment in our journey towards changing the PC landscape, if you will.
What really struck me a couple of weeks ago when there was the big moment with Microsoft is how many of the OEMs are embracing the era of AI, but embracing you as this is happening. And you really showcase a strong backing from the OEMs. And I think with that comes then the interest on the developer side, right? Because you're building this ecosystem. How are you thinking about it? Because in the mobile side, your strength has been to build the ecosystem from a developer perspective as well. You put a lot of effort into that within the Android market.
Yeah. Carolina, it's very important that as we go along this journey, we have very strong support from multiple partners in this ecosystem. It's obviously an incumbent market. We're all used to using PCs every single day. So it's something that drives familiarity with consumers. In our journey towards making sure we drive a cohesive experience on these PCs, it was important for us to start with our partnership with Microsoft, which is extremely strong in terms of the work we both have done towards driving these next generation Copilot Plus experiences. Second, as you look at how we embrace this journey, what's important is that the developer ecosystem, whether it's partners such as Adobe, partners such as DaVinci with, from Blackmagic and all of these partners, whether it's Chrome that is now running native, it's very important that we drive this ecosystem towards applications that will run extremely well on our platforms. Microsoft announced Prism, which was the emulator, and it's an incredibly powerful emulator. So these devices will have apps that run either in emulated mode in a very with high level of performance. Some of them will run native, and some of them will be optimized using the heterogeneous architecture that Qualcomm has to offer. And so to be able to provide more ability for these developers to enhance their applications, we announced a couple of big moments earlier this week. One was the Snapdragon Windows Developer Kit. Our initial goal with that is to make sure that we're able to spread the hardware as widely as we can and provide these developers a platform that they can use to optimize their applications. Because, like I said earlier, the beauty of or the versatility of the silicon that we have is that we have a heterogeneous architecture. And so everyone's able to optimize their apps on either the CPU or GPU, or obviously right now what we're celebrating is the NPU. And so the benefit of us being able to offer that is we give access to a lot of these developers with the hardware that we just announced. The second part of this is to also talk about what we announced, which is the AI Hub. And the AI Hub for us is a very important anchor point as we make it very easy and seamless for all of these different AI models that are evolving very rapidly right now to be able to easily port onto our devices. So our journey as we go along, right, from whether it's Microsoft, whether it's these ISV partners, or whether it is OEMs, as you correctly highlighted, the momentum has been incredibly strong, is to make sure that there is access to hardware and access to platforms that are going to be differentiated. And obviously the Microsoft announcement is nothing but a testament to the unique position that we bring in the market today.
That's awesome. And I like that you highlight the ability for developers to take advantage of the NPU, no matter if it's Excelite or Plus. But we've been talking in the industry a lot about NPU. Explain to a common consumer what this little thing does and why does it matter so much in the new world of AI?
Yeah, it's a great question. When you think about it, Carolina, the word AI and NPU is obviously starting to become more and more prominent in the more recent weeks and months. But when you think about Qualcomm and the position we've had in the industry, right from our mobile legacy, we've had some form of NPU or a DSP or a vector processing. In fact, we've had an NPU in a lot of our mobile platforms for more than 7 years, including our compute platforms as well. The benefit that somebody should see with the NPU, first and foremost, is the benefit of power and performance, which obviously translate to a consumer into battery life. So you can use your PC for a much longer period of time. Second, I think the industry is just at an inflection point with AI. What that means is there isn't a single industry that is not going to embrace AI, whether it is manufacturing, whether it is operations, whether it is software developers, code generation, architects, you name it. There isn't a single industry that's not going to be able to use it. And what this really means is that when you're running some of the tasks on the NPU, you're able to run it more effectively at higher performance and at lower power. Yeah. And the whole benefit of being able to do and run these on the NPU, or in other words, have run this on device AI, is the fact that you get immediacy, which means you get very instant results in terms of what you're looking for. You get privacy, which means all of your data that's stored is on your device. So everything that you do, and I really believe that this is the movement towards intelligent computing, where the PC is really going to start getting very personal. It's going to get to know the user. It's going to be able to understand the characteristics that you deal with, how a user interacts with the PC. It's going to be very, very powerful in terms of how the PC and the user interact over the next several years to come.
I couldn't agree more. And in that, becoming more personal is also empowering the user to take more advantage of the PC, which is what I'm excited about. But, you know, you mentioned status quo earlier. If you're trying to convince both consumer and IT managers, why Qualcomm, why Snapdragon X Elite, what would you say? This is your elevator pitch.
Look, with Snapdragon X Elite, what the consumer should think of is this is a transformational leap, right? This isn't just another platform that somebody should see in the industry. With this transformational leap, we are redefining what a PC really means to the Windows ecosystem. Second, this really embodies a level of performance and a level of intelligence that we've never seen before. So we're at, I'd say, a very pivotal moment in the journey towards this transformation. And both the Snapdragon X Elite and the Snapdragon X Plus that we've recently announced are going to embody a lot of those principles in terms of actually delivering the use cases, delivering the experiences that consumers rightfully deserve. A lot of the way I should think about it is a lot of the devices that have been announced are going to embody this pinnacle of performance that I'm talking about. So we're obviously very excited with what is announced. Microsoft announced the Surface, multiple Surface devices. Dell announced 5 platforms. You have Lenovo, HP, Acer, Asus, Samsung. So all of these OEMs have some incredible devices that will showcase and celebrate both the X Elite and the X Plus and the benefits that I just talked about. So there's something that people should look forward to, because this is going to rapidly change how people use PCs.
I totally agree with you as far as how people use it, and then how engaged they are. It's not just using it because you have to, is using it because you want to, because the return of investment that you're going to get is going to be so obvious to you. Let's end on this, on how do we explain to consumer who maybe have been playing around with ChatGPT for the past, 6-8 months, about the difference between cloud and on device? You kind of alluded to earlier about latency, about privacy. What are some of the use cases or experiences that you're most excited about?
Yeah, great question, Carolina. I think what we're seeing right now with ChatGPT, it's still very much, consumers are still using things like almost like search, where you type in something in a text prompt and you get a response back. What's going to happen over the next several months, and Microsoft showed some of these use cases like Total Recall, they showed Co-Creator. These are experiences that are almost multimodal. What that means is you can almost type something and generate music. You can put in a text prompt and generate images, or you could create videos. And so this multimodality of text to image, image to music, music to video, and how it can transform these industries is going to be huge. Qualcomm has showed multiple ISVs that are able to showcase some of these differences in terms of what we offer with these next generation experiences. We offer DJ Pro, and we partnered with, like I said earlier, Blackmagic, and we showed a bunch of these use cases where you can differentiate and run these applications on the NPU. And so it's just the beginning of a multimodality Copilot with partnership with Microsoft and the Copilot Plus experiences that I think are going to be spreading far and wide in the next many, many months.
Absolutely. And I think we should remind people that this is a journey, not a sprint. And there's going to be so much more that is coming and excitement. And I think in just a few days, I'm sure out of Taiwan, we'll see more with Cristiano being on stage. So I'm looking forward to that. And in the meantime, I am very thankful that you found a few minutes in your busy schedule to come and talk to me about AI PCs and the role that Qualcomm with Snapdragon X Elite has to play. Thank you so much.
No, thank you, Carolina. I think, like I said, this is going to be, this is just the beginning of a movement towards intelligent computing. And with both Snapdragon X Elite and Plus, we really believe that this is the PC reborn. So we're excited. So thanks for having me on the show. I appreciate it.
Thank you.
All right. Thank you, Carolina, for leading that interview. Thank you, Kedar, for your time as well. And it kind of goes back to how AI, what we've been saying, you can utilize it in all different aspects of your life, whether that's in terms of, helping with your homework, outlining what strategies you want to go with, whether it's in terms of computing, gaming, you name it, healthcare space that we talked to Spectral earlier on about as well. We're going to continue the conversation with Luke Lloyd, who is a strategist and wealth advisor at Strategic Wealth Partners, and also Michael Lee, who is the founder of Michael Lee Strategy. Luke, welcome to the show.
Guys, glad to be here as always.
Hey, man, it's going to be a fun one. And I know, Michael, we're waiting on you to turn your camera on and suit up. You're good to go. We'll go ahead and
Mike's got a face for radio anyway.
You going to let him say that to you, man? I'll give you a minute if you want to.
Me and him are close buds. I can say that.
Well, listen, I'm not mad at Luke. I'm mad at the harsh reality of life. Right?
You play with the cards that you've been dealt, my man, and you're playing it well. I'm digging it. Before I get myself too much in trouble, appreciate both of y'all for being here. The AI is such a great conversation, and in our prep call, we had so many things to discuss. I'm excited to it. So I'll kind of dive right in terms of Luke. We'll start with you. AI, right? Is this kind of where you thought we would be in 2024? Did you think we'd be further than we are in terms of technology and adaptation, or do you feel like we're a little bit behind than what you've anticipated?
That's a great question. I think we are, in my eyes, we're exactly where we need to be. This AI implementation takes years upon years to trickle through the economy. I mean, obviously, large corporations of the world, they have the first mover advantage. They have the large amount of capital spend that they're able to invest in these areas. They have enough people to implement this technology, right? But the small mom and pop shops really, still 45% of the economy, the small business owners between 10 employees up to 500 employees, that's going to take a substantial amount of time to implement. So, we're still in the beginning stages, first and second innings of this. And I always go back to this stat. If you just look at the S&P 500, it's over $40 trillion of market cap, and AI is expected to add over 30% to corporate profits over the next decade. So that's large corporations and those small businesses. So if you just look at the S&P 500, that's tens of trillions of dollars of market cap being added because of those profits being added because of efficiency and productivity from technology. So we are just in the beginning stages of this. There's a lot of money to be made outside of the top names that you always hear about.
Michael, I like to be cute about it. And earlier in the conversation with us, a guest, I said, we're just getting in the Uber when it comes to AI, right? We're not even in the parking lot. The ball game hasn't really started, but sentiment, I agree with 100%, Luke, that we're just so early on because there's gonna be so many different companies. The way that I look at it, Michael, is you had like the Motorola Razr, which was the biggest, baddest thing, the Sidekick, which was the coolest thing in town. Then iPhone came out and kind of destroyed everyone in terms of market share. What are your thoughts in some of the companies and the technology in terms of AI and how that's been kind of going around here?
Yeah, I love how you bring up the cell phone. And I can't remember the exact number, but there's an adoption stat. So maybe it's when 60% of the population started using the internet. I think that took about 15 years from when it came out. And the smartphone, I think, took about 10 years. And AI is tracking to do that in about 5 years. So
Yeah.
I would say I'd say it's going to be hard to keep up with the speed of adaptation of artificial intelligence. And when you take a step back, there's all these wide-ranging possibilities. What we know about it at its core right now, and the practical uses at its core, it's just taking data and doing things faster, much faster. So obviously, the people with the bigger pools of data, the larger companies, this is much more advantageous to. But look, there's a middle management white collar shortage in this country, and those are the jobs it's going to end up taking up. So, to Luke's point on the small business, those that can leverage technology faster are going to beat out their competitors. So, like, you look at things like a Toast, where when they're taking your order and you can pay from the little the handheld, and like that will focus into that will reduce the ticket times, manage the inventory. So this is like just a tool like Toast, but on steroids with so many different applications. So people need to figure out different ways to embrace it. And someone that likes investing in technology, and I don't know that I'm like a smart kind of tech guy, but I love it. And it is just an exciting time to be alive.
Luke, I am wrong often, and here's one of the times I was wrong. When conversations were happening about how Walmart is going to go cashierless and how it's just going to be self-checkout throughout the store, I was like, you're out of your mind. How do you know how many bananas I have? How do you know how many pounds of, lettuce or whatever I've gotten, right? How can you kind of accurately have that? But no, now I don't even think, unfortunately, about how there's not a human being checking my items out at Walmart. It is straight all self-checkout.
We talked about it a decade ago, and it's here.
And it's here. And that's the whole point, is that with technology and now with AI, I asked Paul Chang, who's going to have a core conversation after this one, about, hey, where's your company going to be in like 5 years? And he was like, bro, we're talking 6 months to 12 months, right? So that's how quickly the technology is changing. So Luke, let me ask you this. How can the consumer at home, let's look at it from a consuming standpoint, stay on top of technology, but also I'd love to hear your insights on how they can take advantage of the investment opportunities as well, whether it's in the public sector or the private sector, because we're here to make money.
So let's start off by everybody that's watching this, everybody at home needs to learn how to use AI and how to manipulate it to their advantage. They need to learn how to use ChatGPT. They need to learn how to use all these different softwares like the Salesforces of the world, which I'll talk about here in a couple of seconds, that just got hammered by their earnings report after hours last night and this morning, right? So they need to learn how to use all these technologies, because if you don't learn how to use them, you are going to get left behind, and you might actually get fired from your job, because every company is going to be implementing these technologies. I saw it. I mean, just this kind of off topic, different area, but I saw it with my hometown, with the coal mines, the new energy kind of systems coming up. Coal mines got shut down. Everyone's like, oh, there would be these new jobs created. Well, the whole saying was go learn how to code. But a lot of people didn't learn how to code, and they lost their jobs. And now they're still searching for jobs, maybe working like the cashier registers that don't even exist now anymore in today's world. So you have to learn how to adapt new technology, use it to your advantage. And what I'm concerned about, if we're talking about the consumer long-term, is literally implementing this technology from a corporate side means that you are getting rid of jobs. And I think you'll start to really see the adoption. You'll know when the adoption is here, when unemployment ticks up. So there's going to be some bad news and bad things attached to this, because I do think there will be a systematic rise in unemployment as we replace those jobs and companies become more efficient. This is going to be a way for corporations to make more money, which means the rich get richer and the middle class continues to divide. So if you want to partake in that, if you want to partake in that growth and make money on that, you have to look at those areas that are actually implementing this technology, implementing artificial intelligence, or at least helping implement that. So one of the stocks I just brought up was Salesforce. I think it's down 20% right now today on their earnings report. And frankly, it really wasn't that bad. It's like all these AI stocks have so much positivity priced in that if they just miss a little bit, they're going to get hit pretty hard. And this is, I think, an overreaction. I think they reduced their second quarter earnings per share and second quarter revenue guidance by like 2%. I mean, that's it, 2%, and it's down 20%. And their full year and margin guidance are really unchanged. So this was a very small miss, essentially, and the stock's down 20%. We're looking at buying possibly more into that stock. Another stock that's got hit pretty hard the past couple of months is Accenture. They're the biggest consulting firm in the world. They're helping from the large corporations to the small businesses implement this technology, implement this AI. I think that's a great stock. It's like a $200 billion market cap. I think that's a $500 billion market cap stock over the next few years as they help everybody around the world implement this new technology.
You know, Michael, before I come to you with that same exact question, my producer has no idea I'm going to do this. So I'm going to play around a little bit. We talked about, hey, you got to know how to use ChatGPT. You got to know how to use AI. So let's just kind of type this prompt in. I promise I haven't done this before. We're just going to test this out and we'll see how quickly we can go ahead and get questions that I can ask each of you, right? So this is like a live example of what AI can do for you in terms of, in this case, having a conversation, but also in so many different cases, when it comes to autonomous vehicle, that's going to be a big layer as well. So like, Michael, so quickly we can get these type of insights in a matter of minutes. What are your thoughts on the same question of how can the consumer take advantage of the AI technology, but also from an investment standpoint as well? Feel free to answer any of these later on, but for now, that one.
So in terms of like making your day-to-day life better, you know, that's a very, that's a loaded question. I mean, it depends like what you're missing. Like in my personal life outside of work, you know, like I want to go to the beach. Like I don't want to look at a screen or use any sort of technology. So, you know, maybe it could help me monitor my screen time better. You know, prompt me with suggestions just to turn it off. And then, you know, from an investment standpoint, I think, so the coolest stock idea I've ever seen in my career is Palantir. So for those of you unfamiliar, Palantir was founded by the CIA in 2003 to do all sorts of crazy stuff from a national defense standpoint. They've only really had an enterprise product since the end of 2022, and they still don't really have an enterprise sales team yet. Their corporation, their enterprise business is just growing gangbusters. They're already doing everything with AI, whether it's optimizing your energy usage, going into hospitals and streamlining their operations, whether it be hospitals in the Bronx or the entire national health system. They definitely do have a lot of defense contracts. And from a government contract standpoint, only 0.001% of the overall defense budget is spent on software. Where do you think that's going over the next few decades? And then on the corporation side, you know, they do these boot camps where they just come into a company and after, you know, 24, 36, 48 hours, they sit down with management and say, hey, this is all the stuff that we can do for you. And to understand their value and the value of AI, you know, there was a trend, you know, 12 to 13 years ago called big data. And so big data really gave birth to the cloud and a lot of data analytics company. Well, what AI is just that on steroids, and like, not like the ghetto Mexico steroids, like the pharmaceutical grade, like bioengineered man type of steroids. They're already doing it, and the word's just starting to get out, and only covered by 7 banks. Out of those 7 banks, you have 1 buy, 1 hold, 5 sells, and that's, you know, they fundamentally do not understand the business, and that how these companies are spending all this money with NVIDIA trying to build, and Accenture trying to build out their own AI models when Palantir can just do it for them. It's a software that sits on top of anybody. So that's my number 1 pick. I would say in terms of the easy stuff that's out there, Microsoft, Google, Amazon, this investment in AI is not going anywhere. They're beating aggressive cloud numbers, you know, cloud estimates. It's what's driving all of these companies. And it's going to continue raising. And the mistake that Wall Street has made in every one of these major technological trends over the last 20 to 30 years is underestimating the size and the scope of it and how long they last for. And to touch on the smartphone example, those of us saying we live in an AI bubble were the same ones saying that the iPhone would never overtake the BlackBerry. So I still think NVIDIA is probably about 15 to 20% underpriced.
Isn't that crazy?
So
isn't that crazy?
So, and this ties into Salesforce. And so, so Salesforce, their numbers that the street was looking for versus the buy side. So the buy side are the mutual funds and the hedge funds that actually own the stock, and the sell side are the bank analysts. Okay, what the buy side wanted out of Salesforce was way more than they were willing to give, and that stock has had a massive re-rating in terms of their price to earnings multiple earlier this year was like 35 on a forward-looking basis. Now the company's annual revenue is going to be flat or decline. You're not going to get much of a above market multiple for that. Whereas NVIDIA, the street estimates are expecting revenue to flatten out, right, and earnings, in margins to drop by 8 or 9 points next quarter. So they are poised to beat those numbers. I'm sure they will beat the buy side numbers as well. And just kind of my back of the envelope math with very conservative estimates going out a year and adding some sanity, growth to revenue from 2 quarters away to third quarter away, the only dropping 2 points in margin instead of 8 points of margin. I think this is like a $1,300 to $1,400 stock. Their historical multiple is between a 35 and a 40, and so 1250, 1275 gets you to about get you to that 35, and if you think it gets up to a 40. But then you're betting on how long is this upgrade cycle going to last from your legacy chips to the AI GPUs. And beyond that, like once that upgrade cycle goes through, this new Blackwell chip that's 5 to 10x faster than the current chips are being sold, what's the upgrade impetus for that? And so I'll remind you, people thought these upgrade cycles for the iPhone were going to die a lot longer than right now, right? So we're kind of in a very
I don't upgrade my phone every year anymore, Mike.
Yeah, but the predictions for that started in 2013, 2014, right? And it really only started to happen 4 to 5 years later. So if we're in that same kind of scenario with NVIDIA, and at that point they have their services aligned, this stock could go much, much further. But at some point, like it's hardware, not software. Yeah. So there's a limitation. Like there can only be so many data centers. There are only so many companies going to adopt it. And the pickup from that is Marvel and AMD, in that companies don't want to have 100% of their supply chain to come from one single company. And so the only other companies out there that are making GPUs on this level are are Marvel and AMD. I prefer Marvel because if Marvel were just to pick up 1 or 2% market share, it's a lot more meaningful for them as a company than AMD, who's already a bigger company.
This space is big enough for everyone to eat. And Luke, I got a question for you, but you had a reaction when Michael said there's still plenty of room to go and it might be undervalued in terms of NVIDIA. You can provide some insights there if you'd like, or just in the space of how we might still be seeing some laggards. And I'll come to AI and how, I utilize it as well, but go ahead.
As always, Mike has a lot of great points, a lot of great data points. And I think NVIDIA obviously has been the spot to be. And I think it probably will go to $1,400, $1,500 a share in the end and probably overtake Apple as the biggest company in the world. But I really want to hit on that point that Mike made about the upgrade cycle, right? And that's why I said I don't upgrade my phone every single year. And I don't think a lot of people do either. I think is it Moore's Law that talks about how like technology doubles every single year or something like that? It's kind of exponential. There's another law out there.
Luke, that's every 18 months. And then what I don't think a lot of people understand, these NVIDIA GPUs are going like a 5 to 10x in quicker than every 18 months, which is just mind-boggling.
It is mind-boggling, but I've always been around, as Mike is, we're both pretty young. We've been around technology, and I've been hearing it for, I remember a decade ago, talking about how there's only so much computing power you can fit on these chips with the materials that we have, right? Like the silicon, that's why it's called Silicon Valley, like the silicon chips. We basically have to create a new material, a new element on the elemental charts to make things go quicker and faster on the density within the chips, right? So I'm not saying this is now, I'm not saying this is next year, but my long-term concern is maybe 5 or 10 years down the road when chips are at the point where iPhones, and I don't have an iPhone, I have a Samsung, but like these phones, these smartphones that we have, when you only get a little bit nicer camera, you get a little bit faster processors within there, it's not really necessary to upgrade. You're going to see a lot of companies pull back probably their spend and investment around these chips, around artificial intelligence. So the fact that this stock is priced, that there's so much demand, they can't meet the supply, that's fine and dandy for now. And we're willing to pay a higher multiple for that growth. And it's probably going to take a couple of years for all these large corporations and small businesses to incorporate all this stuff. But, the stock market in general is a long-term pricing mechanism. Right. So what happens when there starts to become some fear around that? And all this side thing, another side thing we haven't talked about is what happens with China, Taiwan. What happens? We are in a very geopolitical heated world right now. What happens if China made a move on Taiwan and restricted some of the semiconductors and technology from coming out of there? That's a political risk. And another thing that's a political risk that's not talked about is, you see all these deep fakes out there. You see all this technology kind of being used for bad purposes in some ways, which any technology can be used for bad purposes. Is when something big happens around this, and I don't know exactly what it's going to be, but when something big happens and people get really frustrated, it's going to be politicized. AI and technology have always been politicized at some point down the road. The internet was, and AI will be too. So what happens when some boundaries and rules to play by get set from this AI? That's going to be a downside risk you need to pay attention to, especially when you have stocks trading at these valuations.
You also have crypto that is now being politicized as well. Doesn't matter which way you want to swing in terms of the voting, but now you have Trump that's kind of tweeted out, or whatever it's called on Truth, about how they're going to make crypto the biggest, baddest thing, and how the government will kind of be a part of it, which is interesting because a few years back he wasn't, a fan of crypto in the sense. So that is also being politicized as well. Michael, we talked about so many different things. I want to take that thread and talk about other kind of sectors in terms of, say, cybersecurity that might have an opportunity, right? That might have, hey, everyone's so focused on AI and data centers possibly kind of being like that second layer of a ball game. But like, what about some cybersecurity opportunities that you might see? I've only got about 3 minutes with y'all. So give me some insights and I'll come to Luke.
So just to the sleepy sector for AI is utilities. And that's the power consumption in our country for the first time in forever is expected to increase by 2 or 3% because that's been in structural decline, which means huge healthy things like that. You correlate energy consumption growth is a direct one-to-one with economic growth, and it means extraordinary things for a country's economy. But the other sector, which is kind of bulletproof inside of corporate IT budgets, is cybersecurity. And that gets a little bit more aggressive every year. Palo Alto's had some struggles, but Palo Alto and CrowdStrike are your names to watch there. I still believe in Palo Alto, especially after it's gotten this sell-off. So I was having this discussion about Salesforce and Palo Alto earlier this morning in that customer relationship management software, I don't know if I call it expendable, but it's not as bulletproof as cybersecurity. And how big is the market for CRM going to be 5 years from now relative to today versus cybersecurity? Cybersecurity is just going to keep growing and growing and growing. So, I like Palo Alto. I like how it's gotten its butt kicked. I think it's a multi-year trade that will probably work out spectacular.
Palo Alto, and of course, Nancy Pelosi likes the stock as well. Luke, your thoughts?
The automation revolution kind of talk around AI and technology in general, along with some of the energy plays. So Emerson Electric's a manufacturing firm, essentially helping automate all the processes with technology and AI. That's kind of a sleepy sector when you talk about the manufacturing side and a sleepy stock. Another thing that, we were paying attention to is, what Mark alluded to, all this power that's needed around the energy side, powering artificial intelligence and technology. So we still like and love, not just love, nuclear energy, right? So Cameco Energy that supplies uranium to these nuclear power plants, or just owning uranium outright through an ETF, like I think URA. Those are plays we're playing, not only just because of the infrastructure built out of energy, but because of artificial intelligence and technology.
Well, you have a comment in the chat from Jay Rice talking about how PanW crowd, TCRM kind of taking them down. And that's the thing where it's like, hey, the sector is doing well. One company may not, doesn't mean the others don't need to. We've seen that in social media aspects. When Snapchat would report earnings, it would do awful Facebook would come down, but what they reported, they would go ahead and spike up because they were killing it in terms of that space. Gentlemen, we have to do this again. Whenever we have an earnings show that we do in Q3, we'd love to have you back to discuss those companies specifically. Thank you both so much. This was a pleasure of mine.
Thanks, guys.
All right, Michael, talk to you soon, pal. All right, we are going to keep it moving. We promised you an interview with the new co-CEO, Paul Chang of Brand Engagement Network. Here's a conversation that I had with him yesterday. We're going to continue the great conversation now with Paul Chang, who is the co-CEO of Brand Engagement Network. Ticker is going to be BNAI. Paul, welcome to the show.
Thanks, Renee. Thanks for having me again.
Absolutely. And there's so many exciting things for us to talk about. But before we get into that, give us a quick, brief overview of what is it that your company does.
Well, Brand Engagement Network, BEN for short, we build AI that is helpful. So we have AI that is able to, write papers for students, obviously, gather information for those who need it. But our AI is designed to be conversational and designed to help users, whether the users are corporations, the professionals who work there, or consumers. We design a safe, secure AI that is only trained on approved data set to provide information, education, and perhaps in the future, complete tasks that are mundane. So our goal is to design an AI that is helpful to all users.
Yeah, and AI, folks kind of just thought of it as, oh, cool, ChatGPT, tell me what 9 times 27,000 is. But there's so many different applications to it as well. And I know you achieved a HIPAA compliance for healthcare AI assistants. We'll get to that here in a second. But let's talk about exciting news for you. We're recording this on May 29th. And this morning, you guys announced that you are now co-CEO of BEN. Would love to hear what this kind of means for the company moving forward and why now is the right time to do this.
Yep. Thanks very much. It's an exciting opportunity for me personally, as well as the company. And I think what we're choosing to do here is, coming out of our merger, our DSPAC process, we now know that we have to demonstrate to the market that our technology is viable. There's clear value proposition. We are able to execute on our plans. And the co-CEOs, both Michael Zacharski and myself, will have separate duties where we can focus and apply our energy and to be able to, grow the business and demonstrate to the market that this is a viable business and our AI technology can drive the value to our customers.
And really excited for you personally, like I said, but also what's coming up with the company. So let's go back to the HIPAA compliance, right? You have the right to do business with them. What does that mean for the future of the company?
Yeah, so HIPAA compliance is an important one. It gives us the right to do business with healthcare related companies. Obviously, there's privacy protection in place for all consumers. But more importantly, for us being HIPAA compliant is also good news for non-healthcare companies as well, because we believe that every consumer data should be protected with the same rigor and control as HIPAA is. And by achieving this compliance, we have provided education and training to all of our staff. We've proven that we have control and management over private data. And we intend to apply those rules and those controls across all of our industry sectors so that everyone will benefit from us gaining the HIPAA compliance.
I was talking to a coworker, Drew, earlier about how AI is so in the focus right now that folks may not be thinking about cybersecurity, because we truly are collecting so much data, so much information on not just the individual using it, but also the type of information that they're trying to use that some may want to use in a not so great way. So I'm glad you mentioned how we need to kind of protect the privacy aspects of it. What kind of sets y'all apart from your competitors, right? You kind of have almost everyone in their press releases mentioning AI just for the sake of it, sometimes it seems. But from your legit competitors, what kind of sets y'all apart?
Yeah, and just to kind of follow up on your point, I think the number one hindrance for adopting generative AI, I don't believe it's hallucination, which I think people have mentioned that is one of the problems. I actually think it's security and privacy. Companies with brand names that are well known are not willing to take the risk of damaging their brands by having some sort of security issue or data leakage. So that's where we think we set ourselves apart, because we design with that in mind from the initial architecture, the approach that we're taking, using retrieval methods versus generation methods. And the way we train and fine tune our language model is really designed to protect the user and the user's customers, which means a lot of the companies that are hesitant to adopt generative AI can feel a bit more sure using our technology that is completely ring-fenced. Now, in terms of competitors, what I hear the most is many of our competitors are essentially a thin veneer on top of something like ChatGPT, right? And I would say, why not? It's actually the fastest way to get something out the door. The real question is that model secure? Is that private? And can it scale? And do you have full control over your AI stack? So what makes Ben different, other than the security and privacy protection, is the fact that we have the full stack. We have the back end, which is large language model. We have our own proprietary version. And I like to call it a small footprint large language model, because when it needs to answer very specific topics and questions, it doesn't have to be as large as something that needs to know, everything about everything, right? And answer all questions. That's not the market we're in. We are here to help companies address their customers' needs by providing very specific targeted responses based on factual information and the data set that was provided to us by the companies. We think that is not just a way to scale this operation, but also keep a tight control over costs and be able to enhance concurrency, which most companies aren't quite there yet because they haven't scaled their AI deployments. But I think they'll soon learn that cost and concurrency will become a major issue as they look to scale their business.
I'm glad that you mentioned, in the crypto world, I believe there's a saying where it's like, not your keys, not your crypto. Kind of sounds like with y'all, you have the full stack, like you said, on your AI, and it's not just layered on top of ChatGPT. So you kind of have control over what happens with that data and how you build it out. So I love that differentiation there. What's the game plan before I let you go for the next 5 years, right? You're now co-CEO. What does the next 5 years look like in terms of growth and what you're hoping to achieve in terms of milestones?
Well, 5 years is a long time, especially in the tech industry. So maybe we could focus on the next 12 months. So for the next 12 months, our goal is to get more market validation, not on the technology per se, but really on the value that we're driving for our customers and for our customers to gain benefit from deploying our AI technology. So when I think about healthcare with the limited resources and high turnover and burnout, we know that's an issue. So that's why we went and got the HIPAA compliance so that we could actually jump in and be able to help that industry. And then the other part is industries that have call centers, which is pretty much every brand has call centers. And one thing that I realized is we're quite content as consumers, or maybe content's not the right word, but we're used to being on hold when we call customer service. And I don't think that's acceptable in today's world, right? We live in a digital world. If we were to launch a website and if we had to wait 15, 30 minutes to get the website to load, we would never go back to that website. Yet when we call customer center, we could be on hold for 15, 30 minutes and we still do business with them. And I think that needs to change. There is no reason that digital technology, where it is today, with AI assistants who can provide the information that others can as well, need to be on hold for 15, 30 minutes. So I think we are on the cusp of AI becoming really part of our everyday lives. And I had the good fortune back in late 90s to be part of the internet boom, right? And some people called it internet bubble. But I would say now we can't see our daily lives without the use of internet, how it actually provides all the information to get our day started. We use map functions. We stay in touch with all of our friends and colleagues all the time. So internet is part of our daily lives. And I think AI will also become part of our daily lives, where it is helpful to the user, helpful to the businesses. It would be just embedded. And with AI, I just don't think it's going to take as long as internet has to be adopted broadly. I think the adoption is going to be faster as soon as people realize the value.
And it's so interesting you mentioned like the whole time, like, I have an internet provider that charged me, I think it was like $20 the other month that I don't believe should have been charged, but I didn't want to call. I didn't want to be on hold for 30 minutes and try to get $20 back and go through the back and forth, right? So like there is that opportunity cost and that time value that folks may have because we don't want to wait on hold for minor things that an AI can take care of like, hey, here's a charge, I'm disputing it and yada, 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 and kind of have that back and forth. Now, I remember I needed to change my flight on Delta. I would type in Delta customer service number, click on it, and it would say, hey, instead of calling, would you like to just text with us? And it was just so easy and quick to kind of fix those problems where I didn't have to wait on hold during holiday season. So completely agree with you there. Congrats again on your new title as co-CEO. Genuinely excited for what you and the team will accomplish in the next 12 months. And we hope to talk to you hopefully next quarter.
Thanks, Sinead. Always great to chat with you.
Absolutely. You bet. Thank you, Paul. And that is Paul Chang, who is the co-CEO of Brand Engagement Network. Ticker is BNAI. All right, and that goes ahead and concludes our AI Unleashed Exploring the Possibilities webinar. We had everything from technical analysis with Katie to having executives from publicly traded companies. We had Pete on from Spectral AI. You just heard from Paul Chang, who is now the co-CEO of Brand Engagement Network. And you also had analysts come on and kind of give you different perspectives and possibly and hopefully some ideas that you can take a look at for not just as a consumer in the world of AI that we now live in, but also as an investor and a trader as well. We do this for you. So if you have any other ideas or topics or people you want to talk to, you can email me at zunaid@benzinga.com. But genuinely on behalf of myself, Malia, and Aaron as well, and everyone else that's worked on this webinar behind the scenes, we appreciate you for watching, and we'll see you next time.